Good morning, Jim Barrett from RJO Futures. Notes and bonds this morning started out higher. They got a boost overnight from more woes out of Greece, of course. Contagion trade was working pretty good. The boons were up strongly. U.S. 10-year notes were up strongly. But a little surprisingly, interestingly, the markets have lost their bid today, fallen back to barely higher. Considering the news, it's a relatively weak performance, probably because last week we ended up on a pretty big surge up after weeks of being sold off hard. Yields approached 2.5% in the 10-year note. That's brought out some long-term buyers, and sellers obviously backed off. We fell from the 2.5 down to 2.3. Now 2.3 used to be resistance on the 30-year, possibly it's acting as support at this point in time, which means we got a trading range going into the FOMC meeting. This is a two-day meeting. There will be notes. I'm not positive there's an interview with Yellen afterwards. I believe so. Anyways, they're running out of time in the sense that the year is going to be half over. Publicly, a lot of Fed governors have said they do want to start the cycle of normalizing interest rates. Does it happen in September? I think that's still a long shot. Does it happen by December? Most likely. And of course, Yellen is going to dampen down expectations of any sharp rise in rates. They're a little paranoid about what has happened in the past. For instance, even last summer or 2 summers ago, rather, when Bernanke was still the Fed chairman, and the whole kind of fit about ending QE at that point in time. Anyways, QE, interestingly, has possibly made this bond market more volatile than before. Obviously, huge chunks of supply are out of the market, are in the Fed's hands. And it goes maybe a long way to explain what happened in the past 5-6 weeks when yields rose so dramatically from 2.2 in the 30-year all the way up to 3, whatever it hit, 3.2, I think a whole percentage point. Okay, so Wednesday, 1 o'clock is when we're going to get the news out of the Fed. Again, they're going to go out of their way to let the market know they're not going to do anything jarring, and nothing too dramatic should happen. Housing starts. One of the pushes toward normalizing rates is housing has picked up quite a bit after another cold winter. We've come out here in the spring, and housing has picked up. Mortgage rates, by the way, have pushed up over 4%. We'll see what kind of effect that has. Anyways, the housing starts is due tomorrow morning. The meeting starts. Consumer price index. Prices have been running underneath the Fed's models for 36 months. They're likely to continue to do so for some point in time. That's certainly not going to give the Fed a shove toward raising rates. But the housing might with a great number. Philly Fed on Thursday. If that's a nice number, there is some pressure to get this thing off a quarter point on the short and the yield curve. Anyways, I can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Thank you. On futures may involve substantial risk and may not be suitable for all investors.